Revenues, $312 million. It's a 124% increase over the previous year. The company lost money of $145 million on a GAAP basis, but most of that was about the stock compensation that came in connection with the IPO. Once you strip out the stock compensation, some merger and acquisition costs, you've got a $15 million adjusted profit. And I'm just going to call this an okay. Like, there are a lot of adjustments a lot of companies make that I think are baloney. These are actually pretty reasonable. That shows a $15 million profit. That was not expected in this quarter. The company is expected to continue to lose money, even on an adjusted basis. So they report the non-GAAP EPS, that is, they didn't actually make 2 cents in profit, but the adjusted 2 cents is better than what all the analysts on Wall Street. So chalk went up to Twitter. Again, 0 for the analysts. The analysts got this one wrong.
1 Twitter, 0 analysts.
But Twitter results improving. The other thing that I see, so one, I'm going to put a lot of this stuff in my model. I've already started, but one thing, the first thing to look at, how many users, how many monthly active users they have. They reported 271 million monthly active users. It's up from 255. I think sequential is the right way to look at the improvement because users kind of pile on, and the year-over-year is really not the right way. And what that shows is the company has seen an uptick in the growth rate of users, which I think is the most important dynamic if they're going to grow a big business. That growth rate had been in double digits leading up to the IPO. It fell into single digits. After the IPO, it was at 4%. Ticking back up to 6.5% to 6.3% in the last quarter. So it's a little bit better growth rate. It's 2 straight quarters of a little bit growth rate. Maybe they're coming out of this dip in the growth rate of users, and I think that that's really important for this company.
Interesting. All right, hang on 1 second, Corey. We want to go to Lee Drogan now. He's Estimize CEO. I want to get your reaction to Twitter. You just were talking, you heard Corey Johnson talking about how the monthly active user growth sequentially is actually getting quite much stronger.
Yeah, look, the market was obviously looking for that metric to change. It had not been increasing over the last couple of quarters significantly. But what I really want to focus on here is the revenue number. The buy-side analysts on Estimize were looking for a much larger number than the sell-side guys. But the question was, would the market really even care? Now, they came in and blew that number way out of the water by almost 4%. So definitely a great quarter for Twitter. And then add on top of that the MAU numbers that get that turned around. And I think everybody looks at Twitter and sits there and says, if those numbers significantly get turned around and they continue to grow at 10% year over year each quarter, they're able to generate that revenue, and the revenue base will never go away.
Also, it seems like there are about 211 million users on mobile. Talk about the significance of that.
Yeah, so the app install market on the mobile devices is obviously a huge business for Twitter, as it is for Facebook. We saw the Facebook numbers blow the estimates out of the water as well, mostly on that metric, and it really flowed through to Twitter here, and I don't see that slowing down at all. It's only going to get better.
Yeah, and as far as the market goes, I mean, you're talking about how if the analysts were close or the analysts weren't close, but the business fundamentals here are interesting. I think the reason we care about Twitter isn't Twitter the stock. Maybe some people do, but it's the effect that this business is having on a lot of places in the world. I think that we see maybe this is the future of media. I think the mobile numbers really tell us that, show us that the future of media is happening in Twitter, and they're monetizing off that quite well.
Well, I guess the question had always been, could Twitter engage its users? And they were having a hard time getting them through that sign-up funnel and really engaged with the product. It looks like on the product side, they've been successful this quarter doing that. Now, there's been a lot of turmoil on the product side of Twitter. The revenue growth, part of the business has been very cordoned off and has been executing well. But if they can get both sides of that company really turned in the right direction here, it's a very powerful business.
Hey, Corey, what do you make of the outlook here? I'm looking at third quarter revenue. They estimate anywhere between $330 million and $340 million. What do you think of their outlook?
Well, I don't want to pile on, but the analysts got that one wrong, too. The analysts were...
You always say that. It's the first thing to say. But
well, because companies don't get numbers wrong. Analysts get numbers wrong. For us to expect that the analysts were right in the company, the analysts are trying to do...
But in terms of what the company is saying about its potential growth revenue in the third quarter.
company is saying that the growth is picking up, and even picking up more than the analysts thought it would, and that's a good thing for Twitter.